So as you know, the crypto market is currently correcting down due to FOMC's meeting announcement last week. However, if you thought that the storm has calmed down, well, I think you might be wrong. Curious on why that is? Stay tuned. So as you can see here, last week, the FOMC or the Foreign Open Market Committee from the Fed or the United States Central Bank has just announced their last meeting. The meeting was held on December 17th through 18th on 2024, where they discussed the potential volatilities and uncertainties that might happen in 2025, especially in January. One of the things that they talked about and the whole market is waiting for is the United States interest rate decision. In 2024, the United States Central Bank planned that in 2025 there will be multiple rate cuts. This is taken as bullish sentiment, especially for riskier assets such as crypto. This is because in rate cuts, the Fed is more dovish, meaning that when the central bank is more dovish, the currency of the country usually goes down. Considering that the whole crypto market, especially Bitcoin, has a negative correlation with the US dollar, this means that the crypto market might go up, hence why the 2025 bull market narrative is still strong. However, the narrative might not be as strong as it was before. This is because the Federal Open Market Committee stated in their meeting summary that the rate cuts might not happen as often as planned in 2025. As you can see here, the meeting discussed a lot of things such as the financial market, the economic condition of the United States, and most importantly, inflation and rate cuts. If we take a look here at the calendar, the announcement was done on Wednesday last week. However, that's not the only thing that's causing volatility in the market, because on Friday, the United States decided to announce non-farm payrolls and unemployment rate data. Both of these data showed positive result, meaning that the employment sector of the United States is currently getting better. This is a positive sentiment for the US dollar. However, this is a negative sentiment for the crypto market due to the negative correlation. This is why the crypto market went tumbling down from 100k to around 90k or 92k to be exact, where currently it is still consolidating between 94 and 92k. So the crypto market went tumbling down due to some statements in the FOMC meeting. The main focus is on the rate cut, where the Federal Open Market Committee expected that 2025 will not have as much rate cuts as 2024. This is because of four things. The first thing is that inflation, where currently the United States is expecting higher inflation. If the Federal Reserve decided to cut interest rate due to this prediction of high inflation in the upcoming months, the Federal Reserve cannot cut interest rate. This is because if the Federal Reserve cut interest rate, the inflation would go higher, because higher inflation requires the central bank to raise interest rate. The next thing is, the Federal Open Market Committee has stated that the current interest rate is more than sufficient to bring the United States into a neutral position, similar to 2024. This is because, as I've said before, a lot of rate cuts happen in 2024. This is why they think they don't need as much rate cuts in 2025 as much as 2024. Overall, this means that the urgency of rate cuts they think is not there anymore in 2025. Also, this statement is supported by the labor data or the employment data, which was launched during the NFP or non-farm payroll. As you can see here, it is said that non-farm payrolls, which are the payrolls in non-farm sector companies, has increased from November 2024 to December 2024. Also, the monthly unemployment rate from November 2024 to December 2024 have also lowered, which means that the labor data is currently positive, meaning that the Federal Open Market Committee took this as a positive sign towards the US economy, which is why if the economy is better, then rate cuts might not be as urgent as it was planned in 2024. Also, the last thing is, the Federal Open Market Committee is mitigating potential uncertainties due to Donald Trump's inauguration and the change of the US president. Considering that Donald Trump has a history of implementing new regulations and policies, such as the trade war with China, the Federal Open Market Committee is mitigating the risk of uncertainties in 2025, meaning they think that the US Central Bank doesn't need rate cuts right now because there are a lot of uncertainties coming ahead. This is why I stated in the beginning that the volatilities might not be ending yet for the crypto market. This is because of two things. The first one is Trump's inauguration in 2025, which is scheduled to happen on January 20th or Monday. Until this happens, there might be a lot of uncertainties. This is why traders and investors, especially big ones, decided to take their money out of the market to wait and see. This is because under the Trump administration, there might be new policies, especially regarding inflation, which is the current problem in the US economy. Speaking of inflation, the inflation data from the United States is also one of the reasons why volatilities might continue this week. As you can see here, on Wednesday, the United States will announce core inflation rate and inflation rate. The United States will publish the monthly and yearly core inflation and inflation rate. This is a significant economic data because this might trigger movement for the US dollar, meaning it might trigger movement also for the crypto market due to the negative correlation. As you can see here, it is predicted that the monthly core inflation rate will stagnate. Also, the same thing is predicted to happen with the yearly core inflation rate. However, the monthly inflation rate is predicted to go up, as well as the yearly inflation rate. The difference between core inflation and inflation rate is that core inflation doesn't account for food and gas prices. Gas prices falls under the category of energy, which is why it's not accounted in the core inflation. However, in reality, inflation rate is more important than core inflation rate. This is because food and energy are the two main commodities in our everyday lives. However, the United States usually determines the interest rate based on the core inflation rate. This is why for countries such as the US, it's important to pay attention to the core inflation rate, especially the yearly one. If the core inflation rate stagnates, then this means that the potential of interest rate going up is still low. However, if core inflation rate goes up, then interest rate might go up as well. This means that as long as the prediction is correct that core inflation rate stagnates, there's no risk of interest rate going up. Because if interest rate goes up, then the whole crypto market might go tumbling down. As you can see here, the current interest rate is set at 4.25% to 4.5%. From the Federal Open Market Committee meetings in December 2024, it is mentioned that 2025 will have 75 basis points of rate cuts, which translates to around a 0.75% rate cut, will equates to around 3.75% up to 3.5%. This means that the Federal Open Market Committee has a target of reaching that interest rate in 2025. If this were to happen, then it would be bullish for the crypto market. However, nothing is currently guaranteed yet. If we take a look here, one of the things that hinder the growth of the bullish potential for the crypto market is the rising value of the US dollar. If we take a look here, currently there are multiple news that states that the US dollar will keep going up. And if we take a look at its price or its value, we can see here the uptrend is still strong. If the uptrend for the US dollar is still strong, then the possibility of a bull market is still small. All of this is due to the market's nature of having negative correlation with the US dollar, meaning that if Bitcoin or the whole crypto market wanted to go up to a bull market, then the US dollar might need to correct a little bit, which can be taken as the sign for a bull market. Overall, in my opinion, currently traders and investors, especially big ones, are waiting for Donald Trump's inauguration. After he officially became president, the volatilities might lower. However, it is currently predicted that the next rate cut will happen on June 2025. But some are also predicting that the rate cut might also happen on March 2025. So, when bullish momentum returns, you can capitalize on it perfectly. However, as many experts said, you cannot time the market, so don't try to time the market. Just go into the market with good strategy, such as dollar cost averaging. Well, that's it from me, and if you guys like contents like this, don't forget to like, subscribe, and click that notification bell so you guys are notified when we next upload. Cheers guys!